set of opening cues are concerned. Dhiraj Relli, Managing Director at HDFC Securities, now joins us on the show as our special guest as we do our election trade sort of run-up. This is a segment that we're doing all week today in an important week sandwiched between two key polls. Dhiraj, great to speak with you. Now, it seems like in the last 24 hours, the market may have shrugged off some of those concerns as far as the election outcome is concerned, as those jitters are concerned. Would that be a fair assessment?
Good morning, Tamanna. Thank you for having me. I think I would say that this is a fair assessment, but I am not unnecessarily perturbed with the volatility we are seeing during the election times. This was in any case on the anvil and expected. In fact, I was looking at the data of VIX data for the 2014 and 2019. Actually, VIX went up to 28.8 and 37.7 also in these election times. So we went only up to, I think this time in these elections, 2024, to about just 21.48. So yes, it was expected. And when you, when you are sitting on profit, some people would like to do the profit booking. Some people will do the bottom fishing. So some kind of a range bound activity was expected. I think what has changed in the last couple of days is probably, the two ministers have assuaged the concerns of the market participants also. Dr. S.S. Jaishankar was there at NSE. I attended that event also, and he could able to allude that how the incumbent government has a high probability of winning, and there will be a stability and continuity in the policies. I think the same thing was alluded by our Honorable Finance Minister Nirmala Sitharaman at BSE event also. So I think some of these things assuage the concerns of the market participants. But overall, I think the claims and counter claims of various political parties, experts and so on will continue, and we will see that some volatility will be there in the market. It is the inherent nature of the market, and these are the times when you will witness more volatility.
An opportunity is the question, Dhiraj, because those who are maybe a little perturbed by the kind of volatility we've been seeing would be wondering if this is an opportunity to come in, stay on the sidelines, and then what exactly do you bet on?
I think India is an absolute sweet spot. Elections will come and go. I'm not undermining the importance of a mega event, once in a 5-year event. But let me tell you, when we will talk again in June post-elections, it will all be done with, and we will have a stable government, and we'll move forward. We'll be discussing the other issues and not elections anymore. So my take is that, these are good levels to enter in the market when you get some correction, some kind of a froth going away from the mid caps and small caps, and particularly in the select counters where the results have been good. This is an opportune time for us to get into the market, and we've been recommending all our investors to invest in a staggered fashion. Actually, there is no one-size-fits solution for all investors. Those who are existing investors, they are already fully invested or largely invested in the market. I think there is no need to panic. There is no need to have any knee-jerk reactions. Let the volatility come and go. And at best, what they can do is they can rebalance their portfolio. Some of their preferred stocks where they could participate and they have been feeling FOMO. Probably they can reallocate some funds there. Those who haven't invested, those who have been fence sitters in the market, I think it's a good time for them to start investing in the market irrespective of the volatility in a staggered fashion.
Dhiraj, hi, it's also Samina joining in. Do you think FY25 could be a volatile year for the markets, or do you think on the flip double-digit gains are still possible? And also any risk or chances of a black swan event in FY25, not locally but global in nature?
So let me answer the second part of your question first. I think what are the key risks we are carrying? I think the biggest elephant in the room is not elections, but the stagflation and high interest rates. And we are witnessing that time and again the commentaries are coming from the central banker, whether it is Fed or Reserve Bank of India, that rate cuts are getting postponed and pushed forward. So that is one of the big risks that we carry in the market. Our take is that it will get pushed to the last quarter or even to the first quarter of the next calendar year also. So that is one big risk. Of course, I can't undermine the importance of geopolitical risk that we are carrying because of the all geopolitical tensions that are going on. However, crude have eased little bit, so to that extent that got assuaged. But these are the risks I see. And in domestic market, the black swan event could be like what we have witnessed in the 2004. Let me take you, 20 years back. I was looking at the data and I realized that on 17th May 2004, BSE corrected 15.5% on a single day because of the different than the expected outcome in the election. So that if we get something like that, the probability is less on our assessment at the ground level. But if we have event like that, then there will be definitely a knee-jerk reaction in the market.
Dhiraj, just a very simple straight-up question. What sectors are you betting on regardless of who forms the next government at the center?
I think the India growth story is hovering around the domestic economy. That's something we will continue. Whichever government will come, they will invest more on the infrastructure side. The defense momentum, you guys covered a good story today morning on defense, will continue. Some of the recovery will happen in the BFSI side because we so far in last 7-8 years we witnessed only government-led capex, and now only off late we started to see some green shoots in the private sector capex. I think this is a long haul. India have been always a consumption story. Consumption has been a secular theme in India. Whenever we get the capex going, that's when the industrials, that's when we see the BFSI sector doing very well. So that's what we are looking at. I think FMCG has been struggling big time on the volume growth side, though on the margin side they've done better. With the El Nino-led better monsoon on the anvil, I think there could be some upside in the FMCG also, but that too in the later half of the year once we get more visibility on rural demand picking up. IT is one sector that has not performed in the last 1 year or 2 years. I think that's almost bottoming out, and one can start looking at accumulating select names there as well.
Stay on with us. We'll take a very short break and we want to continue this conversation. We want to get your specific calls and picks on the other side. But as we go into the break, you were talking about minister's comments, and here's what Finance Minister Nirmala Sitharaman